Can unrealized gains and losses included in reported earnings under financial reporting standards contribute to the calculation of the new 15% corporate minimum tax rate? Could this potentially convert some notional deferred taxes into cash taxes and reduce the effect of renewable energy tax incentives?
I think the answer on the second part probably is no, but I don't want to say it is for sure, because he's asking the same questions I ask of Mark Hamburg, who's the smartest guy on combining understanding of business, understanding the tax code, understanding SEC rules and everything else that you'll find in corporate America. And these questions, the particular question on marketable securities, I don't think has been answered yet. And I think that there are a number of things about the new Tax Act that were not enacted. But I would say this: we have said ourselves what we think the proper approach to operating income. We didn't design that because this tax law came along some years back. So we would think that you wouldn't include capital gains, unrealized capital gains, but we've got enough. I think, no matter how things turn out, the 15% tax doesn't bother me in the least, and we can figure ways once we know the rules where we will pay the 15% tax. And, we were paying 52% taxes, federal income taxes, when I bought control in the partnership of Berkshire Hathaway. I mean, the tax rate come down dramatically. And the deferred tax that was embodied, for example, at Sanborn Map, when I was involved in a system that was allowed under the tax law to avoid that tax. But that was a huge tax, 52%. So we will live with this tax code, and we do not think corporations are overtaxed in the United States. And and I think that the conversation about how we lose out to the world and all that sort of thing is really nonsense. But we've got a new law that hasn't yet, the regulations haven't been written on, and when we know what the game is, we will absolutely figure out a way to pay 15% every year, and which generally we've been paying anyway. And as I pointed out, if there were 1,000 corporations in the United States that paid what Berkshire has been paying, nobody else in the United States, no individual, no corporation would ever pay any income tax, Social Security tax, gift tax, estate tax, anything else. 1,000 like Berkshire Hathaway would produce the revenue that's being produced by the federal government, that's being derived under the present tax code from everybody in the United States. And I don't feel badly about that, and I'd love to get it to what it's 1/500th or something of the sort. But I'd like to do it. If we can do it at this rate, I'm happy to do it. I think we are privileged to live in the United States, but we also have to control spending, and that's something that Congress doesn't quite like to do. And they didn't like to do it when my dad went to Congress, but they've dug in more as the years have gone by.
Despite the new 15% corporate minimum tax rate, Buffett is not worried about its impact on Berkshire Hathaway. He believes that once the rules are clarified, they will be able to pay the tax and still operate effectively. He also does not believe that corporations are overtaxed in the US. He believes that capital gains and unrealized capital gains should not be included in the calculation of the corporate minimum tax rate. He believes that operating income is the appropriate metric for determining the tax owed. He believes it is important to control government spending in addition to tax policy. policy. He notes that Congress has not been willing to control spending in recent years, but that it is necessary to ensure the long-term health of the economy. Buffett notes that if there were 1,000 corporations in the US that paid what Berkshire Hathaway pays in taxes, no one else would need to pay any income, social security, gift, or estate taxes. He believes that Berkshire Hathaway produces a significant amount of government revenue and does not feel badly about the amount of taxes they pay.